Hello students. Ready? So students, all set for this one. First of all, students, we are going to close this trust taxation revision, and after that, students, we are going to take across to the TDS and TCS. I hope that all of you are ready with this one. So students, let's start then. Last lecture, students, Amrita, good evening. Students, those who are watching this session first time, you'll just say what has happened in the earlier session of the revision lecture. So I am going to give you all the links of the earlier lecture in the description box. Okay. So in the description box, Harsh, you're going to get all the links. Tomorrow you'll get it. So you can see this description box, all the links of the revision lecture so far, you are going to get it. Okay, friends. So let's start then. Students, in this context, students, let's look upon this. Last lecture, students, what we had discussed. Students, we have discussed comprehensively the entire computational provision. How the total income of the trust is to be computed. What are the various permutation and combination that takes place, isn't it? So all these aspects, students, we have taken that into account in our last lecture. Everything, in fact, even anonymous donation, everything, whatever was there, everything was being taken care of. Meenakshi, good evening. So what we are going to going to do in the current lecture, students, would be that we are going to take across the other aspect, and that is about section 1023C. First of all, friends, let's look upon to 1023C, the new section, the amended section of 1023C. Then I will do the amendment of registration, and then last one, students, we will be doing exit tax. Okay, so let's look upon to this sequence one by one. So whatever right now we are going to discuss right now in the trust taxation, everything has got amendment. Okay, so everything has the amendment. So let's start with the 1023C. Students, the exemption of section 1023C, I think all of you may be aware of it. This is available to whom? The Saranya, good evening. The exemption of section 1023C, students. This exemption, students, is available to, generally we say, medical and educational institutions, isn't it? Apart from the medical and the educational institution, students, even for these institutions, which you can see here itself, may I put from this to this, like all the PM fund, CM fund, National Fund, Swachh Bharat Kosh, Clean Ganga Fund. So whatever money which they receive, students, whatever the money that they all receive, these monies are exempt unconditionally. Not only that, students, they may also be doing some investment in some of the these money will be put across in some of the investment. From that investment, they will be earning interest. That interest income also is eligible for a full exemption, students. That interest income also is eligible for a full exemption, and that exactly the point. So this is the first one, I will say, the unconditional exemption. So there is no condition so far as the income of these funds are concerned. So unconditional exemption. Did you all got this one, students? Fine. Now this leaves us to the last two category, which is the educational and the medical institutions. The educational and the medical institution. Now for these institutes, let's have a look. What do we get, students? Let's have a look. What do we get? Be careful. Now, students, for them, again, for these particular categories, students, for these categories, Amrita, Saranya, Meenakshi, Harsh, Veti, for these categories, what we can do is just that I'll put it across like this. Now, there is an unconditional exemption. So I'm just writing from UV. UV means unconditional exemption. Now these are meant for the government government particular institution, government medical or the educational institution, government medical or the educational institutions, government school, municipal school, government hospitals, isn't it? So all those are all the institutions, namely for medical and educational purpose, which are substantially financed by the government, and students, they are wholly for the purpose of the providing the education or providing the medical facility. Then these educational institutions or these medical institutions will be eligible for an unconditional exemption. Students, again for them it is unconditional exemption. Bhagwati, good evening Bhagwati. Unconditional exemption. So they also will be getting the unconditional exemption. For whom we are talking about it, students? For government school, government hospitals, so all of them will be eligible for unconditional exemption. Okay, students? Perfect. Thereafter, if you see, in fact, this was a 5 crore. Now, up till last year, it was 1 crore. Now, students, they have increased to 5 crores. Now, I remember my school qualifies for this one because in my school, the fees was around that 100 rupees was a fees for my school. So with 100 rupees fees which was there in my school, obviously the turnover of my school was not going beyond 1 crore. If I'm talking about before the amendment, the turnover was 1 crore. So if the turnover of the medical institutions or the turnover of the educational institutions was not going beyond 1 crore, then again for those institutions as well, they will be eligible for an unconditional exemption under section 1023C. Unconditional exemption. Same feature, students. Same feature they should have. What is the same feature? That they should be in this particular case should have first of all the turnover criteria. The turnover should not be going beyond rupees 1 crore. Okay, and they should exist wholly for or solely for the educational or medical purpose, as the case may be. They should be existing only for or solely for the educational or medical purpose, as the case may be. If this is the criteria, if you satisfy, you are eligible for the exemption. If this criteria, students, if you all satisfy, you will be eligible for the exemption, students. I hope that all of you are clear with this one. Now the exemption is unconditional. Now what is the amendment now, students, of the Finance Act 2021? The amendment of the Finance Act 2021 is this. They have increased the limit from 1 crore to 5 crores. So what has happened, students, now you can see over here is the increase in the limit from 1 crore to 5 crores. Harsh. They have done, yes, they have increased the limit, students. This is what these people have done it. They have increased the limit, students. This is what these people have done it. I hope that all of you are clear with this one. But they have played one game. Big game, students, they have played. Now what is the big game? I'll tell you. The big game is that although they have increased the limit to 5 crores, that is fine. But now, for example, earlier, let me give you an example, students, because this is such an important and it is going to be there in your exam. Going to be there, students. This is going to be there, and many students will have a very difficult time if they are not aware of this proposition. So earlier, if a particular trust, students, who is there, so any trust who is there earlier, and they have got two things, like they have got medical as well as the hospital, both of them are there. Like Balaji Trust, Tirupati Balaji has got charitable, the charitable part of Tirupati Balaji has got both medical as well as hospital, isn't it? So earlier, students, was this that supposingly the turnover is 85 lakhs of this, and the hospital turnover is 85 lakhs, 80 lakhs, forever. What would be the example? So earlier, before amendment, in this case, we used to say what? Before amendment, we used to say that 1023C exemption was allowed unconditionally, unconditional exemption. Same here also. Same as in the case of this one also. This was the before amendment provision. Now I'll tell you what has happened after the amendment. Now, after amendment, one good thing that they have done is that they have enhanced the limit to 5 crores. So, after amendment, now they have enhanced the limit to 5 crores, isn't it? Now, just let me give a twist to this. So, before amendment, it was 1 crore. After amendment, it has become 5 crores. So, let me give you a twist in this case. So, now, after the amendment, say both of them has got their turnover of 3 crores each. So, if they have got 3 crores each of the turnover, will they be getting an unconditional exemption? Will they be getting an unconditional exemption, students? Now, students, the answer is Bhagwati, no. They will not be getting it, because now we have to see that 5 crores limit. The 5 crores limit, Amruta, that 5 crores limit now needs to be seen in aggregate. And did you cross the turnover? Did you cross that particular turnover primary of 5 crores in aggregate? Answer is yes. And because you have crossed the threshold of 5 crores in aggregate, therefore the unconditional exemption of 1023C will not be available to you. The unconditional exemption of 1023C will not be available to you. So, does it mean that no exemption of 1023C will ever be applicable to the SSC? Does it mean that will there not be any exemption which will be there for the SSC students? To that the answer is, students, there will be an exemption, but the exemption would be condition based. The exemption would be condition based. And what is the condition? Same condition, students. Whatever is a section 11 condition. What is section 11 condition? The section 11 condition is that the exemption is available if you apply these income towards the charitable or religious purpose in India. You apply the income towards the charitable or religious purpose in India. So, same particular condition will be applicable. This is what has happened. So, before the amendment, students, the turnover was 1 crore. The limit was 1 crore. And in that limit of 1 crore, students, where do we used to do it in aggregate? Before this amendment, were we doing the aggregate and checking whether the threshold of 1 crore is satisfied or not? No. We were doing it independently. We were doing it independently to check whether the threshold of 1 crore has been breached or not. But after the amendment, now what they have done is that they have enhanced the limit from 1 to 5 crores. But that particular 5 crores will now be tested. That particular 5 crores will now be tested, students, in aggregate and not independently. I hope that all of you are clear with this one, students. Every one of you. If you can now just have a look to this particular point, students. Please have a look. The amount limit of rupees 1 crore has been increased to rupees 5 crores, and such limit shall be applicable to an SSC with respect to aggregate annual receipts from the university or educational institution or institution as referred to in clause this. So, aggregate. Aggregate of what? Aggregate of educational receipts and the hospitals, everyone, as well as simple as that, aggregate of educational and hospitals. So, if it exceeds, students, this part, so as I told you, students, if it exceeds 5 crores, then yes, 1023C exemption would be available. I'm not denying to that. But the exemption would be based on what? Would be based on the conditions. The exemption, students, would be based on the condition. And what are these conditions, students? The condition primary are these. So, this two, which I'm just putting it for all of you, these two, students, I will say that they are condition based. They are condition based exemption. Condition based exemption. Now, which condition, students? Same condition. Same condition of section 11. I hope that all of you are clear with this one. Same condition of section 11. Yes. Harsh. Means condition based. You should say means condition based. Is that clear to all of you, students? Now, what is that section 11? We have seen in the last lecture. Again, I am repeating this, students. I will give you the link of all the previous revision lecture in this description box of the video, which you can see it tomorrow. In the description box, you'll get it everything. Shall I proceed now, students? Now, in the examination, I can tell you what will happen. You have to be extremely careful, students. I've seen one question And if I may put up in my compiler, if you allow me, let me see if I have the compiler in front of me. Will you allow me, students, or not? Can you, students, tell me the page number of this one compiler of this trust taxation? Quickly, students. Bhagwati, Amruta. On the trust taxation part. Harsh. I just want to show you one amendment part which is there in this compiler. How the impact of this amendment that we have discussed just now, you are going to feel it in the examination. Just wanted to show you that, students. Can anyone tell this particular part quickly, students? Vedi? $363. So, students, let's have a look. In this case, if you all will see, in page 363, I'm just doing this amendment part, that particular, how you will get it in the examination, students, so as to secure your interest in the examination. Let's have a look. This question is 333. Can you see that, students? The question is question number 333. In this 333, a public trust. Can you see that, students? This is what the question will be. Same question you'll get it in the exam. This is your ICAI question, which I have modified a bit to accommodate this amendment which they have targeted. Just an ICAI question, Bhagwati. I have modified a bit to accommodate this particular amendment. Let's have a look. A public charitable trust registered under section 12AB. This is 370, page 370. Yeah, trust starts from 363, but this is page 370. So, public charitable trust registered under section 12AB runs a hospital and also medical college, students. It furnishes you the following information for the year ended 31st March 2022. What is that particular information, students? Let's have a look. Gross receipt from the hospital. Students, very close. From hospital, it is how much? 425 lakhs. 425 lakhs. And can you tell me now point number 5? Income from medical college, rupees 10 lakhs. Rupees 10 lakhs. This is medical college, education institution. How much is the gross receipt? The gross receipt of the college of the year is how much? 90 lakhs. 90 lakhs, friends. Now you tell me the final answer in that case. This is 90 lakhs turnover. And point number 1 is 425 lakhs turnover. So 90 plus 425, students, how much is that? 515 crores. So the turnover is 515 crores. How much is the turnover? 515 crores. And if the turnover is 515 crores, 515 lakhs. 515 lakhs, which means 5 crores and above. Whether the exemption, will it be unconditional? Or the exemption, will it be condition based? Whether the exemption, will it be unconditional or the exemption would be condition based? It would be condition based exemption. It would be condition based exemption. All of you agree to this one? Vyathi, Amruta, Harsh, Bhagwati, every one of you students, all of you agree to this one? This is how they are going to target in the exam. I just wanted to tell you how these people are going to use the amendment to their advantage. Trust taxation, I'm telling you, students, ICAI is known for coming up with some unique thing which students doesn't know how to apply it. So it's very important that I'm putting you that amendment through how this question has been framed. So I've modified this question. Again, I'm repeating. I just modified this question so as to ensure that the amendment is taken care of. Now, can you tell me, students, what was the position that was there in the last year? Up to last year, what was the case? In the last year, what we used to do? Up till last year, students, be careful. Up till last year, what we used to do was that the hospital was 425 lakhs. So, and the medical college is 90 lakhs. Till last year, do we used to do the clubbing, or we used to take it independently? Till last year, do we used to do the clubbing, or we used to do it independently, students? Please tell me this. Last year, up to last year, it was independent. And if it was independent, then in that context, this 425 lakhs till last year, because it crossed 1 crore, for the hospital, it would be condition-based exemption, because it used to cross 1 crore. Therefore, for hospital, it is the condition-based exemption. And for this, for medical college students, you tell me 90 lakhs, so does not exceed 1 crore, 90 lakhs, so therefore does not exceed 1 crore. So what was the case? Up to last year, this 10 lakhs was completely exempt. We used to never even see how this 10 lakhs has been used, whether it has been applied for the charitable purpose or not. Those criteria used to become irrelevant for an unconditional base exemption. This is what the effect was. Is that clear to all of you, students? Every one of you are clear with this proposition? That exactly is the point, students. So I hope that every one of you are clear. So with this, we are done with this one very important point of section 1023C. Rest of the things, students, are the same as what we have discussed. Now, coming further, students, in this context, now I have given you each and every aspect, whatever was to be considered. Now with that, let's come to the registration part. Students, registration part, only 2 things that can be targeted in your examination, for which you need to be ready for it. Only 2 things. You say, sir, what is that 2 things? We are very much curious to know about it. Okay, fine, students, I'm telling you about it quickly. First of all, clause number 1. Students, first of all, you should know this is about clause number 1. And in the clause number 1, do you know what will happen? In the first clause, students, what will happen? Tell me this one, student. So, in the first particular clause, students, what will happen? Every trust, existing trust, whosoever are there, every one of them will have to make an application, students. Every one of them will have to make an application. So all the existing registered trusts, repeat with me, students, all the existing registered trusts, they need to make an application. And by when they will have to make an application? Within 3 months from the 1st of April, primarily. So the time limit of making the application would be within 3 months. Within 3 months, students, in that case. So this is what it would be, that this is how the things has to be considered. Now the chances are very high that in the first year, because they may not, supposingly they have made the application in the same year, then what will happen? Technically speaking, what the law says, within 3 months. So within 3 months from April, in this context. So can you tell me in this regard, up to 30th of June, this is 30th of June. 30th of June 2021. They need to make an application by 30th of June. Within 3 months means up to 30th of June. All of you agree to this one? By 30th of June 2021, they will have to make the application. That is the maximum time limit. And the time limit for passing the order by the Principal Commissioner would be, students, another 3 months. From the end of the month in which the application is received. So depending upon in which month they have made the application, plus 3 months. From the end of that month, plus 3 months. The Commissioner will be required to do the registration. Means they need to get themselves re-registered. Validity would be for 5 years. Now this is very important. Now because please understand, students, this trust, you cannot say now this registration would be prospective. No, this is just a kind of a formality that they need to satisfy, just to ensure or give an opportunity to the Income Tax Department to verify whether your purpose or the object, is it for charity, or you are just in the name, you just have got a charitable name, but your activity is not charitable. So they just need to reconfirm on that. But once they are confirmed that no, our doubt whatever was there is now reconfirmed. It is that you are charitable in nature. So question is that the registration that will be granted afresh, will it be prospective or retrospective? This becomes a question. Will that registration, will it be prospective or retrospective, students? To that the answer is the registration has to be in this context. The registration, students, has to be retrospective. Why? The assessment year from which the approval was earlier granted to it. Obviously, this is seamless. This is like a going concern case. This is a going concern. So, obviously, we cannot say, no, from today only you are registered. It cannot happen that way. He is already registered, but therefore, this is a mandatory formality that every one of them has to really confirm on this. And therefore, the associates only would be said to be satisfying the mandatory formality in the process. And therefore, the registration would be retrospective. So, just keep that in mind. Beyond that, students, now clause number 4, if you see, this is what I just wanted to share with all of you. Students, this is what it is. This is for the clause number 4. The clause number 4, so any other case, this is for the new one, new trust. So, in your examination, students, you will get only these two. Either you will get for the existing one on the registration or you will get for the new one. So, the trust, students, who is going to be newly registered for charitable religious purpose, for them what they need to do? Students, in this context, at least 1 month prior to the commencement of the previous year, relevant to the assessment year from which the approval is sought in form number 10A. Okay, so that is what it is. Now, obviously, students, we will say that at least one. So, this is your time limit for application. This is what, students, the time limit for application. So, the time limit for application, you can yourself will see it is 1 month prior to the commencement of the previous year, relevant to the assessment year from which the approval is sought in form number 10A. In form number 10A, students. So, that is what they are trying to suggest in this case. Now, if you all will be very careful about this particular part, they are talking about this 1 month prior to the commencement of the previous year, relevant to the assessment year from which the approval is sought. So, it means that by 20th of February 2021, if supposingly the previous year would be previous year 21-22, so they need to make an application by 21st of February, by 28th of February, students, by 28th of February, isn't it? So that is what it is. But what if, students, what if I'm a person who wants to start a charity in the month of, say, July or August. But then this law is very difficult for me, because then you are saying, no, you should have applied 1 month before. 1 month before the start of the previous year. It implies that to do the charity now I have to wait for another 6-8 months. Because then I will not be getting the exemption. And that is the reason why, if I could not make the application a month before the start of the previous year, then what is the remedy? The remedy shows is the last column. The application made during the previous year 21-22. So I am making the application the same previous year. The provisional approval would be effective from April 22-23, which implies that whether the provisional application. Now this is all about the provisional application, students. This approval, students, that you are going to get it. This approval, students, that you are going to get it is all the provisional application. Now what they are trying to say, let's have a look. The approval within 1 month from the end of the month in which the application is made. This is the approval for the provisional registration, students. Okay. Approval within 1 month from the end of the month in which the application is made. The approval shall be provisional application. That is perfectly fine. Not an issue at all. So, in the month in which you make an application, 1 month plus. So, if say for example, students, you have made the application in the month of February. Okay, so therefore, say by March end, they will have to give the application. They will have to give yourself. They need to get yourself registered by March 21. This is how it will be, isn't it? But now, since this is also allowed to us, therefore, if the application, students, if the application is made, say in the month of, say, May 2021 in the current year, May 2021. So therefore, in that case, the June 2021, they need to get ourselves provisionally registered. Provisionally registered students. Is that clear to all of you? They need to get us provisionally registered students. I hope that all of you are clear with this one. Every one of you are clear with this one. Now you will say, sir, then what about the file registration? These are only this new application are only for provisional registration. And then what about the file registration? I'll just coming to that. First of all of you just pay attention to what is provisional registration. Provisional registration, students, is just given on the basis of documents. Obviously, there is no history for the new trust. Do they have any history to really verify whether they would be for charity? Not much. So the government will not hold on to this particular trust. What they can only do is that they can only go as per the academic details. What are the academic details? The documents. Trust deed. Only the academic details. Because we don't have the opportunity to verify their action, and because we don't have the opportunity to verify their action, I am just going to go with those academic details like prospectus, agreement, so on and so forth. Those are the only relevant records that will be considered by me so as to finally decide whether I will be in a position to give them this particular benefit or not. I hope that all of you are clear with this one. So that is it. So that's the reason why only 1 month they are telling you. This is the logic. But thereafter, this provisional has to become final. Students, this provisional has to become final. All of you agree to this one? This provisional has to become final, isn't it? Yes, why not? Clause number 3. And what are they saying? Provisionally approved fund or trust, etc. for the final approval. So whatever is a provisionally approved fund or trust for final approval. So this is now the comparison. And what is the comparison? By the way, for how many period? What is the length of duration for provisional registration? 3 years. Can you see that? 3 years. The length of the duration is for 3 years. Okay. So 3 years is this particular duration period for the trust being provisionally registered. So coming back on this one, the question that arises is, how do we go for this one now? Let's have a look. So provisional registration, let's have a look. Clause number 3. Yeah, all the benefits is enjoyed. So provisional approved fund or trust, etc. for final approval. Point number 1, at least 6 months prior to the expiry of the period of the provisional approval. 6 months. What is the expiry? Expiry would be 3 years. So means that 6 months prior to the expiry of 3 years, you need to pass like a final order finally to confirm whether the trust will it be eligible for the exemption or not. So that is what they will have to do it, students. So whenever 3 years is going to be there, you have to compute from in that case, from the provisional registration to the 3 years period. Check it out 6 months before this particular, the 6 months period, before this 3 years period is going to get over, the trust will have to, students, the trust will have to get that themselves finally registered. So finally, they need to get approved. So there has to be the provisional registration should get converted into the final approval, or what? This date, 6 months prior to the expiry of 3 years, 6 months prior to the expiry of 3 years, this date will be compared with 6 months of the commencement of its activity. 6 months from the commencement of the activity, students. What does it imply? So in this case, students, it will imply that whenever they will start, this commencement of activity means when they start doing their charitable purpose. That is what they are trying to suggest. So the activity may get commenced right from day 1. I am trying to start my trust, but I am not in a position to do the charity. Why I am not in a position to do the charity? Because right now there is not sufficient reserves or sufficient profit for me to do the charity. That could be the reason. That could be the logic that then they can give it in this regard. So therefore, they are trying to say to you is just that in this context. So whenever they will start the application, because obviously what they need to see, students, what they need to do is that the trust, see, this is all logical. The commissioner would be interested to know what, students? The commissioner is interested to know whether do you actually do any charity or not. So this commencement of activity would mean that whenever they start doing the charity, Then from that 6 months from that, they will have to make an application for the final registration. They will have to make an application for the final registration, isn't it? So that now they can tell to this particular to the income tax department that look, we are engaged to provide charitable or religious purpose in India, and therefore kindly grant us an unconditional exemption under section 1023, an unconditional exemption under section 11 or 1023C, as the case may be. So therefore it is within 6 months from the of the commencement of its activities. So that is what it is. And the exemption, students, once they say that final registration is granted, if the final registration is granted, then the exemption will be considered from the first of the AY for which the fund or trust etc. was provisionally approved. Obviously this has to be the case. I cannot say no up till the last 1 or 2 years for which you have provisionally registered, you are not going to get exemption. If I am doing a final registration today, obviously earlier point of time, was the exemption available to this trust? Yes. Harsh, answering to your question, was this particular trust was eligible for the exemption? Answer is yes. For the earlier year, he was eligible for the exemption. So even if the trust gets tomorrow finally registered, still the exemptions are retrospective. The exemption, students, are retrospective. I hope that all of you are clear in this context. Fine, students, and this is the amendment relating to the registration part of the trust. So we are done with this. With this now we are into our last segment, and that is exit tax. The exit tax, students. Now on the exit tax, students, coming on this one. Now before that, students, political party, you have to be just very careful about it. This time it can be targeted. Political party. For many attempts, political party has not been come. Now you say, sir, it is just like a lottery for us. Yes, I understand, students, it's a lottery question. But it comes, students. As simple as that. Provisional period included in 5 years period means? What does that 5 years period? That 5 years is the fresh registration. This 5 years would be the registration of fresh. What this one? And that exactly how the things has to be looked upon. So now, students, I hope that all of you are clear with this one. Just a second, students. Just a second. So, students, let's start, students, then in this context. So this one, students, is about, as you can see over here, Yes, Bhagwati, that you are true in terms of the fact that it generally comes in the examination. So we will just deal with this. A couple of questions are there. I can just make a quick access to all of you to that question. Students, obviously when you know that when I apply the income for the acquiring the asset, will I get the exemption, student? When I am applying the income for the purpose of acquiring the asset, will I get the exemption under section 11? All of you are saying yes, isn't it? That is true, students. What you people are saying is true. Do I have any lock-in period that up to by when I need to be investing? Up to by when we need to keep that asset invested for charitable purpose? Do we have any such particular, students, the time limit that okay, now that you have taken the exemption by applying the income for acquiring the asset, you need to ensure that the asset remains locked in for a period of say 2 years, 3 years, 5 years, 8 years, 10 years? Nothing of that sort is there, Bhagwati. Isn't it, Amruta? So we don't have such particular criteria or the condition. I think all of you are agreeable to this point. And that is where the real abuse lies. What will happen is that today I claim an exemption, and tomorrow I make an exit. I close down the trust. So next year I may close down the trust. So I have claimed the exemption on my income and I hardly did any charity because next year I shut down. Or if not shut down, I have converted myself into a private trust. Again, nothing to public. Or if not converted to private trust, what I have done is that I have amalgamated to another trust with dissimilar object and which is not registered under section 12. With dissimilar object and which is not registered in section 12. So that also primarily is like a default, because now for charity the asset was only be used till the time I was in existence, because now I'm amalgamating myself with another trust and that another trust is with a dissimilar objective and it is not registered as well. So these are the cases. I'm just listing down for all of you all the default cases. And that is the reason why whenever such situation occurs, government says that fair enough. If you want to make a move, we can make a move. But pay an exit tax and then you make a move. Pay the exit tax, students, and then you make a move, students. This is what the government is saying in this regard. That is what is the argument put forth by whom? By the government, students. I hope that all of you are clear with this one. So this argument is put forth by the government, and accordingly, can you see this one, students? Herein. Now, first of all, this is a specified date. Like, this is a simple one. Because this specified date is an important one in this context. So this is a specified date which has been there, and accordingly so friends, in this context, these are the dates. They like date when the registration which was being granted was cancelled, because no longer I am doing this activity at all, students. So therefore the registration is getting cancelled, 12AA. Or the other aspect like date of merger, date of dissolution. Those are the date. Now students, from that date, even this is important, students. Be careful, because then there's an interest factor always. From that date, within that 14 days period, students, what you need to do? You need to make the payment of exit tax. How much is the exit tax? 34.944. Now, how much is the interest in the case there is a non-payment? So, if there's a non-payment, interest under 115 TE 115 TE at 1% per month or part of the month for non-payment of tax within 14 days. For non-payment of tax within 14 days. Within 14 days. Is that clear to all of you? For the non-payment of what students? For the non-payment of the tax within 14 days. Okay, so after that the interest will begin. Fine, students. Now in this case, herein, students, let's have a look. So just keep that particular point in mind. Now this rate of exit tax is 34.944. This is MMR. Students, this is the only case of MMR which is 34.944. If you remember, in the first class of the tax rate, we were discussing for an AOP and all, when we talk about the MMR. For the AOP and all, students, when we were talking about it in this context, we were getting like here in 30% plus 37% plus 4%, and the effective rate was something 42.744, students. Is that the case? 42.744. Just confirm 30 plus 37 plus 4%. So always keep in mind, students, because this is a very classic confusion. Only for trust tax, 42.744%, students. 42.744%. Only for trust taxation, students, we have 42.744% as the rate. Okay. Sorry, 34.944 as the MMR. For all the cases wherever MMR has been used, it is 42.744. I hope that this point is well taken by all of you, students. 42.744. Fine. So therefore, this is what it is. Only for exit tax, it is 34.944. That is what it is, because here the surcharge loading is only restricted to 12%. Here the surcharge loading, students, is restricted to only to 12%, and that is the reason of this 34.944%. That is it. Now this 34.944 would be applied on what? On the accredited income. And how do we determine this accredited income, students? This is what it is. Now please pay attention. Now as you people also are aware of it, all of you are aware of it, students, you will have to show your main answer like this only. You will have to show your main answer like this only. Like this would mean that you will make a format, and this format will be like the aggregate fair market value of the total asset. This would be the case minus what? The total liabilities of the trust. So aggregate fair market value of the total asset minus what? The total liabilities of the trust. So that will get reduced, students. And therefore the accredited income. Now also, sir, but the value you'll write like working note number 1, and maybe if required for this also working note number 2. But the examiner should see your main answer in front of it like this. It should not be that you start with working note first and then put this main answer. Don't do that. You will have to present the answer like this only. And you can have to write like this: accredited income to be on the specified date if possible. If you are in a position to give the specified date, like on the date of dissolution, if there is a case, then please go ahead and write that. Please go ahead and write that. Is that clear to all of you? Perfect, friends. Now, the entire catch point is that the FMV valuation, isn't it? We will do this FMV valuation, but before we do that, I just wanted to clarify certain important points. Students, you tell me one thing. Following assets and liabilities in respect of that asset shall not be considered in the accredited income. Before we in fact look into the FMV valuation, how the FMV valuation would be considered, the first and the most important point which I just wanted to discuss with all of you is this: that how is there any exclusion while I compute any of the asset in the balance sheet or any corresponding liability in the balance sheet? Is there any exclusion that I need to do? Yes, I need to. Students, if you remember in the last lecture we have discussed that so far as the exempt income of the trust is concerned, only one exempt income. Only one exempt income, namely the agricultural income of the trust is independently allowed as an exemption. Is independently allowed as an exemption to the trust. But all the remaining Section 10 exemption of the trust, students, you should be very careful that they are not independently eligible for exemption. They are not independently eligible for the exemption. And that exactly the things are there in this context. So they are not eligible for the exemption. Primarily, so in that they are not eligible for exemption under their section. The exemption is available to them only if their income, that income which is the exempt income, if that income is applied for charitable religious purpose, only then, students, only then the exemption is available. Only then the exemption is available. But the only exception is with agricultural income. The agricultural income, students, is exempt independently. The agricultural income is exempt independently, students. Is that clear to all of you? The agricultural income is exempt independently. I hope that all of you are clear with this one. All of you are clear with this one, students? So that is what the point is. I hope that every one of you are clear, isn't it? So if I'm supposingly if I claim that, students, if I'm claiming Betty, if I'm claiming this, that I have used the agricultural income to acquire any of the asset. I have used the agricultural income to acquire any of the asset. Definitely, students, I will say what? I will say that, look, I have not abused your Section 11 exemption, because I got this exemption of agricultural income independently. So you cannot say that I have abused the exemption of Section 11 by doing those conversion or dissolution, isn't it? So you can or mergers, etc. So that is the reason why whatever asset is acquired and which is there in your balance on that specified date, whatever is the asset that is acquired from the agricultural income, that asset will be excluded. That asset will get excluded, students. That asset will be excluded in calculating the accrued income. I hope that this point is taken well by all of you. Point number B, students, is the asset which is acquired before registration. Obviously, students, supposingly any of the asset, if I have acquired it before the registration, it implies what? That point of time, those were the days wherein my income was taxable because I was not registered. So it implies what? That these assets were being acquired out of the tax paid income. So if these assets continue to be there on the specified date, will I then be blamed for the fact that there is an abuse so far as Section 11 is concerned? Is there any abuse? Answer is no, because I have acquired the asset from the tax paid income. There is one more point, which has not been written over here. One more point. The asset which is donated, to other registered trust. So chances are very high. Registered trust on or before the specified date. So the asset donated to other registered trust on or before the specified date. That is what they are trying to say. Quite logical, isn't it? If supposingly I know that I cannot take the charity forward, let me at least donate this asset to the other trust so that they can do the charity forward. So those asset which has been donated primarily to the other registered trust, those particular asset which has been donated to the other registered trust, that will also not form part of your accrued income. Students, I think that this point is well taken by all of you. Is that clear to all of you or not, students? Fine, every one of you are clear with this one. Now come to the accrued income, the fair market value. Now the fair market value of the asset, students, minus the liabilities. That is what we have to do it. As such, the things are very simple. Only couple of unlisted shares is the only game. Unlisted shares, students, is the only game. Rest of it are simple. Unlisted shares are the only particular point, students, that needs to be looked upon. But before I do the unlisted share, let me try to first finish it off with the liability front, and then we will do the unlisted shares. So let us look upon to the liability front, students. So liability, students, that has been there here in part B on the liability part, students. Liability, they are only telling you that you have to take up the total liability of the trust. Students, you have to take up what? The total liability of the trust, and from that total liability of the trust, kindly exclude these items. Kindly exclude these items. What are these items? Capital fund, corpus fund, reserves and surplus, contingent and unascertained liabilities, income tax, TDS, TCS liability. So from that, you please reduce this particular front, and that is what you are going to get it exclusively this side. Okay. So this will require an exclusion. This, students, will require an exclusion. So from that, please ensure to reduce these particular. So can I say it is nothing but the outside liability? Can I say it is nothing but the outside liability? Outside liability, can I say this or not? From the total liability. Now please, I will tell you the format of your competition. I will show you how in compiler the solutions are being put across. From my total liability of the trust, if I am removing the capital fund, reserves, contingent and unascertained liability, income tax, TDS, TCS, what is left out? What is left out, students? Only the outside liability. After this exclusion, what is left out is only the outside liability. Do you all agree to this one? If you all agree to this one, students, then may I try to give you a particular students, an angle over this. Be careful. Be careful, students. Let me give you a particular this thing. How they have asked the question. Couple of questions are there in the past questions of compiler. Now, students, if you see over here, supporting girl child charitable trust, I think every one of you, I just wanted to show you the format of solution. Calculate the tax liability in the hands of the trust. Okay, there is a merger, students, which has happened. Now these are the asset of the trust in the form of stamp duty value of the land. There is also an equity shares of EDM Limited, which is traded in the Bombay Stock Exchange. I just wanted to make you visualization. 55,000 of preference shares held in Niharika Limited. So that is there. Then see the corpus, outside liability, provision for taxation and liability in respect of payment of various utility bill. Students, see, this is what it is. This is the liability of the what? Of the trust. Okay, now students, in this, the way solution has been given to you. So asset minus liability, I told you this is how it would be. Thereafter everything is working note. Asset minus liability, thereafter everything is working note. So this is your main answer. Rest everything is a working note. Rest everything is a working note. This is what I have told you this in this context, the working note particular part. Now if you all are clear with this, my only particular part would be like this. Be careful, students, all of you be careful. Total liability computed in accordance with the prescribed method of valuation. Now see how they have done it. Here the valuation of liability, they have directly taken only outside liability. Outside liability, corpus fund 15 lakhs, not includable. Provision for taxation, not includable. So they have directly taken what? 6 lakhs. Do you know what they have done? 6 lakhs. 6 lakhs is what, students? You have been given corpus fund 15 lakhs in this context. Thereafter, provision for taxation not to be considered. Liability is 6 lakhs and outside liability 90 lakhs. So in fact, this 90 lakh outside liability and this for utility bills. So total is, so this is a direct approach. This is known as the direct approach of taking the liability. Direct approach, okay? So please be careful. In this question, you have given only the abstract please pay attention. I try to identify, because many students don't get full marks and they cry after the examination that our answers are right, we are not getting full marks. What is the reason? I am telling you the reason. Because you don't know how to present the answers. Here, the question is not about the balance sheet. They have not given you the balance sheet, they have given you the extract of the balance sheet. When the extract of the balance sheet is given to you, then you will only choose whatever is required as far as the format is concerned. Format is as far as the format of accredited income is concerned. So, as I told you, so far as the liability is concerned, what we have to choose, students, what we have to choose is only the outside liability, and we have done choice. Okay, but I now want to take you to another example. Can you see that here? Liability, how they have given the liability of the trust. Here the liability of the trust is 1135. Don't you think that we should directly take 335 being the outside liability? We should directly take 335 here, na? Do you all agree to this one or not? We should be taking the 335 directly. No fuss about it. Do you all agree to this one or not? We should be taking 335 directly or not, students? Please tell me. Every one of you are saying yes, isn't it? But we will not take 335 directly, students. Do you know what we are going to do? We will do indirect approach. What is the indirect approach? 335 minus 800. So as to get 335. This is how the presentation has to be. This is how the presentation has to be. Can you see that? Now the working note number 2. Where is working note number 2? See. From the total of this 1135, what you are removing? You are removing from this one the capital fund, and there is one more thing which has been given in outside this. You just, what about 30 lakhs? See, this 30 lakhs is there. If you want to, you're desperate about this one, just have a look to point number 4. Included in sundry creditors means included in 335. Rupees 30 lakhs provided on estimated basis to the contractor to which no bills are credited. No bills are received. Means it's a contingent one. Can I say, students, contingent liability? Bhagwati? Can we say this to be a contingent liability, students? And the answer is yes. Why not, students? It is a contingent liability. So the bottom line, students, is this, that this contingent liability that is there in front of us will be excluded, because contingent liability will not form part of the liability that has to be reduced. My only point is this. Please pay attention on the conclusion. If you are given a final full balance sheet as on the specified date, whenever you have in your accredited income, whenever you have to show the liability, in the working note of the liability, you will have the total liability minus the exclusions. Total liability minus the exclusion. And what is there in the exclusion, students? In the exclusion, you have the capital fund, the dividends, the taxes, TDS, and thereafter the contingent liability, isn't it? Those are the things that will be reserves. So those have to be excluded. But supposingly, if they don't give you the balance sheet, but they give instead to you the extract, here you don't have the balance sheet, you only have the extract of the liability position. Will you do the total minus the exclusion? Can you do that approach? Answer is no. So here what I will do, I will directly choose what is relevant. And what is relevant over here? The relevant in this particular case is the outside liability. And that outside liability is what has to be chosen in this case. I hope that every one of you are clear. This is so deep. I don't think that students have even picked up this thing. They only are interested to get their final answer. And that is the reason why what happens in the examination day, this really create a big problem for them. Okay, now other than that, students, for the asset, so students, for the asset, what you need to do is this, that, see, rest all the assets are herein. Let's have a look to the assets on this context. In the case of the asset, students, I hope that all of you are clear with this one. Now, and in fact, there is a practical question already in front of us now. Students, the only picture which I just wanted to show you, let's go do the relevant revision, students. The rest of it is fine. This is an important one because this is where quoted share is easy, students. Average and it is the, for quoted share, students, it is the average of lowest and the highest price. This is what we do for the quoted shares. The lowest, average of the lowest and the highest price is what we have to take into account. Unquoted equity share. This is what it is, students. Here, in this examination question that has been given to you, that examination question, remember, the equity share was quoted in the recognized stock exchange. So if that is the kind of an investment that you hold in the equity share which is listed in the recognized stock exchange, it is no brainer but to take up the average of the lowest and the highest price as on the date of exchange. And if we don't have the valuation as on that date, so you take the preceding date. That is just simple. Where the students really are finding themselves uncomfortable is on this unquoted part. Students, in the unquoted part, always keep in mind this PV divided by P is nothing but, what is this PV divided by P? This PV divided by P is nothing but my percentage of holding in that, the trust percentage of holding in the unlisted shares of the company. Holding in the unlisted shares of the company. The trust percentage of holding in the unlisted shares of the company, students. So that is what they are trying to say in this context, and that exactly is the point. I hope that all of you are clear with this one now. Anyone? So PV divided by P is nothing but the trust percentage of holding in the unlisted shares of the company. As simple as that. So that leads us to this A plus B minus L. So what is this A plus B minus L? It's a simple thing, students. A is your all the assets which are being there in this context. Bhagwati. So A is the book value of all the asset excluding which is covered in B, and B we all know. All those bullion, jewelry, precious stone, artistic work, shares, security. Like whenever you realize the B, students, you remember the students say that, sir, our thought goes to the capital asset definition in that exclusions part, isn't it? The capital asset definition in that exclusion part as well as the immobile property. So that, just keep that in mind. Bullion, shares, precious stone, artistic work, shares and securities, and as well as the immobile property. So excluding that, for all the remaining assets, it has to be the book value. It has to be book value. And then what about these assets? For these assets, so in that particular case, students, the valuation will be done in the manner provided in this rule. Same particular valuation that we have to do for them. Like how do we do that? So if you can just see over here, like how do we do for immobile property anyway? If the trust independently holds for immobile property, how do they do the valuation? If the trust independently hold for what, students? Hold for the other particular asset, any other asset, then how do we do this valuation? So it is just the way. So there would be an unlisted shares. So in that unlisted shares, you have to just see the extract of the company. For the extract of the company, check the book value except for these specified assets, which are the share securities, bullion, jewelries, immobile property. For immobile property, let's take across the immobile property. Higher of the following: open market value and the SDV. Students will say, sir, what about bullion and jewelry? That will fall under any other asset. The fair market value on the valuation date is what will be considered for the bullion and jewelry. Okay, so those are the case. The shares, students, as you all know, shares has to be the unlisted share, the unlisted company. If they have done some investment in the shares, check out the kind of the shares that the unlisted company has held. So say for example, they have held in some, say, Reliance quoted shares. So again, the average of the highest and the lowest price, that is what it would be. Fine. So that is how, students, they will be doing the valuation. So that is what will give you B. And what is L? L is the liability. Liability of the unlisted company. So liability of the unlisted company, and the same thing, students. Same in a simple term. Exclude whatever was there, students. Exclude whatever was there in this side. So after the exclusion of this liability, technically speaking, student, you have to take up the full book value of the liability of that unlisted company, and from that full book value of the liability of the unlisted company, you will have to exclude what, students? Nothing but, in the simple word, the outside liability. If you take the full book value of the liability of the unlisted company, and from there you will have to reduce the outside liability, in this context, if you have to reduce this particular part, it is nothing but the net effect would be the outside liability is what will be reduced, and that will give you the net asset value of the investment, the net asset value of the shares of the unlisted company, the net asset value of the shares of the unlisted company. And on the net asset value, apply the pro rata share, PV divided by P. Apply the pro rata share, which is PV divided by P, and you will get the final answer. You shall get the final answer, students. I hope that every one of you are clear with this one. So therefore, if the trust is holding any investment in the unlisted share, then it is A plus B minus L into PV divided by P. That is what you do. And for the remaining one, students, we already have dealt with it. So if I just may put across to your observation, students, a question itself directly now. So two questions, students, we have looked upon. See herein, on the valuation date, this supporting girl child, you tell me stamp duty value of the land held at rupees 15 lakhs. However, if this land is sold in the open market, it will be 17 lakhs. The book value of the land is 20 lakhs. The book value will have no relevance in this context. Here for immobile property held by the trust, we will have to go with 15 or 17, whichever is higher. So it is 17 lakhs. Whereas equity shares, which is traded in recognized stock exchange. So in this context, the lower price per share was 75 and the higher price was 85. The book value of this, so take the average 75, 85. So it is the average. Preference shares held in Niharika Limited, the shares will fetch 44 lakhs if they are sold in the open market. So it is 44 lakhs, which is there for the preference shares, and that is what you will get the answer. So the value of the asset, students, we have discussed, this is 17 lakhs. This is based on the average of 80, which I have told you, and thereafter the other particular assets as well. The fair market value of the land, 15 lakhs and 17 lakhs compared, higher of the two is this. We got the stamp duty value, and thereafter this 44 lakhs. Total this assets, and thereafter students, the liability is 96 lakhs, which I have discussed with all of you. If you see over here, this is a beautiful question, students. This land has been acquired existing since this date. What they are trying to only tell you, they are trying to tell you this land is acquired from that period when the trust was, students, the trust was in this context, students. So here the exemption was applicable. So this was a year in which the exemption was applicable, so there was no doubt in this regard. In this context, the exemption was applicable, students, in this context. Fine. So this was 100. Land and building purchased in the year 2015, 800. 2000. Now this, for both 100 and 800, students, you will take the stamp duty value as on the specified date, or the amount that it would fetch, or the amount that would be fetched as per the registered value. So obviously 250 looks on a higher side. So this 250 is what I'm going to take for the second land, which is 800. So the second land, which is 800, again 1000 would be compared with 1000, and higher of the two is 1050 is what will be taken for the second land. For the equity shares, which is listed in the Bombay Stock Exchange, highest and the lowest value, so take the average. So I have to do the average, and that average is what would be applied in this case. Balance in the current account, balance in the FD on their book value, cash in hand on the book value, TDS to be ignored. That's exactly what I am going to do. Can you see that, students? So land on this date, the two lands which are being there, students. Thereafter, quoted share, take the average book value for the remaining one, and the liabilities we have already discussed. Did you all got this one, students? All of you are through with this one, students. Any doubt, please do let me know. I have done with you even a practical question. I am not taking in chances to this one, students, because this is what ultimately the practical is. I told you already, students, the political party this time is something which is very, very important. The political party, students, this time is very important. Didn't I told you this time, students? Political party, students. So let's have a look to the political party. So political party, students, why I'm saying so? Students, the political party has got their 3 incomes, or may I say 4 income for that matter. So which is that income? Income from house property, IFOs, capital gains and voluntary contribution, these 4 income are exempt from tax. But if students, they satisfy all the following conditions. Can you see that? All the following conditions, which are those? They will need to keep and maintain all the books of accounts, record of each voluntary contribution in excess of 20,000, names and address and amount contributed by such person. So that record needs to be kept, students. Be careful. Now there was a question in the examination, and I should warn you that the same question may come in the examination in your attempt also. Many students become clueless about this type of question of political party. They don't know what to write and how to write. They may do it in one. There are 2 methods of doing that solution. They choose one method, but they don't write the note on other method. They get 0 marks. I've seen that solution, students, in front of me. So my humble suggestion is that you have to be very careful about one particular point which I'm going to tell you. I'll directly take you through to the practical, but before I do the practical, I'll just quickly revise this part. Accounts are audited by the accountant. Okay. No donation of rupees 2,000 or more should be received otherwise than by an account pay check, draft, ECS, other notified electronic mode. Okay, by the way, students, tomorrow the revision lecture on TDS and TCS will be at 10 o'clock. Okay, I'm just telling to all of you that tomorrow lectures will be at 10 o'clock. 10 to 2 o'clock, students. That will be 10 to 2. And we should be in a position to see. I'll tell you the target. TDS, TCS, I'm going to get it done tomorrow, and one more lecture, maybe a small lecture I will require in one more time in this week. Maybe I'll take on Monday or Tuesday, one of the 2 days. So my TDS and TCS is over, and thereafter, after that, students, I'm going to take across the topic on alternate tax regime, thereafter the MAT, AMT. This is my final leg, and capital gains. So this is my final topic which I'm going to do in the revision part. Is that clear to all of you? 10 a.m. in the morning. Okay, and apart from that, if any miscellaneous topic you want me to revise, do let me know on that. Okay, apart from that, any miscellaneous topic, if you want me to revise it, you can let me know. But my target is very clear. I'm very clear on these one. So these are the targets which we are going to deal with it. Is that clear to all of you, students? So students, now in that case, record of each voluntary contribution greater than what, students? Greater than 20,000. Name and address and amount contributed by such person. Accounts are audited by the accountant. Fair enough. Accounts, students, are audited by the accountant, and no donation of 2,000 or more. No donations of rupees 2,000 or more should be received otherwise than by an account paid check or draft or ECS other notified electronic mode by a particular party, else exemption under section 13A shall not be allowed. That Harsh will discuss on that. Shall not be allowed in this regard. Okay. So this is what it would be. So no donation of rupees 2,000 or more should be received otherwise than by way of an account pay check, draft, ECS or other notified modes. Okay. So 2,000 is the limit. Be careful, students. 2,000 is the limit for this particular political party. Be careful. For ATG also, students, for ATG, tell me, if I'm giving the donation in cash, ATG limit, whether I get ATG. In ATG, do I have this limit of 2,000? Do I have this limit of 2,000 in ATG? Quickly tell me, students. And this about the ROI, students. And the answer is yes. If you see the ROI, student, a political party should furnish ROI under 139B within the due of 139(1) for availing the exemption under section 13A. Can you see that? If they want to avail the exemption under section 13A, then they need to file the ROI within the due date. Now, coming to this question which I was talking to all of you. This was question, students, in page 383. See, this is an examination question. Rent of the property, interest on deposit of other bank 5 lakhs, contribution from 50% of rupees 22,000 each 11 lakhs, and contribution at 22,500 each from 440 members in cash 11 lakhs. Here the record is maintained. This is in cash. How much ultimately was allowed, students, here? How much was allowed? What was the maximum threshold? What was the maximum threshold in this case, students? As simple as that. Can you tell me the maximum threshold? And students, the maximum threshold in this case was 2000. 2000, isn't it? So 2000 was the maximum threshold, but they have done this. Now my question to all of you is this, that only this 11 lakhs of the exemption would be lost, Amruta, or the entire exemption would be lost. Net profit is a PGBP income. By the way, this net profit is a PGBP income. So obviously this PGBP income, when you talk about it, that is taxable. That is anyways taxable. But other remaining point, students, other remaining point which is there above, I'm talking for them. Other remaining point, students, I'm talking for them. Did you all get this one? Say quickly. This is what it is. Can you see the answer? Can you see the answer, students? Entire income has been made taxable. Entire income has been made taxable. Right from house property, after taking standard deduction, business income, this was anyways was taxable. This was anyways was taxable. Income from other sources, students, 5 lakhs. Contribution 50%, this was also, otherwise they were exempt. Other source was exempt, house property was exempt, and what about this one? So this was about this one. Now what you will do, students, in the examination, that note which I was talking about it, the second approach which has been there is another thought as per which the exemption will not be available only in the case where the default has existed, and therefore for the remaining particular income the exemption would be available. For the remaining particular income, the exemption would be available. This is a second thought which is there. So that alternate note you are going to give it. Main solution would be this. One note here you are going to put up, and that note would be that as per another set of solution, where the default has occurred, on that default the exemption would be lost. On that default, students, the exemption would be lost. I hope that all of you are clear with this one now. Every one of you are clear, students? Please tell me, students. Every one of you on this particular note, students, are you all clear with this one? So with that, students, we are done with this particular question, and now this covers up our trust, taxation and political parties completely. Now students, I am winding up today's session over here itself. Any queries, if you have it, do let me know, because then I'm starting from tomorrow TDS and TCS. So tomorrow we will be starting with TDS and TCS, and as I told you, 4 hours, I think we should be done with TDS and TCS completely. But if there is any spillover, we'll try to complete tomorrow itself, the TDS and TCS part. I'll not have any spillover, so that as students are saying about the assessment procedure, then why not? We will start with assessment procedure in one of the days in this upcoming week itself. Assessment procedure, students, I'll just try to then target in upcoming weeks. 2 or 3 days, I'll just target for the assessment procedure. Is that clear to all of you, students, now? All of you are clear, students? Perfect. Now, with that, I am done with this, students. And now then, students, just quick announcement, students, about our particular features of this one. Students, intermediate, any of your friends are there, please do let them know about the fact that 25% hike is going to happen. And I think maybe up till this month end only, chances are very high. And thereafter, from 1st week of April, New Year, they will start 25% hike in the intermediate. Any of your friends, colleagues, they want to take up the subscription, please tell them, take up it in this last week of March itself. And don't forget them to use this code CADS to get that 10% outright discount. So this is what it is, students. After this, Students, the Unacademy feature, students, as you all know, ask a doubt facilities, isn't it? This is a very great feature in the plus segment. I think many of you are there, wherein you can raise your hand and directly you can communicate. So it actually takes away the burden of writing the huge queries and all those stuff, isn't it? So that is one thing which can be taken out completely in this context. Now the plus subscription plan, students, it's starting from as low as 3 months. So maybe this is best for fast track and all. Even those students who have got their attempt in November, please do tell them about this 3 months part, because this is, I don't know, because these 3 months and all doesn't last. Some months it is there, some months it isn't there. So you can tell to your friends also about this 3 months. At least do tell them, if they have got November also as their attempt and they want to take a fast track, they can do that, take the particular thing. And also tell them, can you see that when you proceed to pay and you have to put a referral code, it is CADS. Iconic subscription, students, is minimum 12 months. So now it is suitable for those who have got their attempt in May 23, November 23. For those students, Iconic subscription is the best one. So 12 months, 24 months and 26 months. So May 23 onwards, November 23, and those are the people. Again, students, it's a herein one-time payment is required, but 28,800 for the entire group. Entire group, students. Can you just imagine this? And in this, the textbooks are also provided in the Iconic feature. This is one of the feature. Plus, there are test series, 3 integrated test papers, 40 marks, 80 marks, 100 marks. These are unmatched things, students. Then there are some dedicated team of doubt solvers round the clock available to all of you. Unmatched across it. And that is the reason why, students, this is something that you should try to strongly tell to your friends to take this particular Iconic. If they have got entire group pending and maybe their attempt is due in May 20, you will say, but sir, what about the amendments and all? As I told you, we are starting with, in the month of May, the batch on May 23. So they can definitely take this particular thing and mentally get relaxed with all the hassles of the books and the queries and other things and all. That is a kind of the platform which gives you this particular support. But whatever you do in the platform, be it from Foundation, Inter, Final, CA or UPSC, anything, just they need to be told to put the code CADS referral code so as to get the 10% outright discount which the platform offers. So tomorrow, students, I'm going to meet you at 10 o'clock in the morning. TDS, TCS is our target, and I think we are going to complete that TDS and TCS tomorrow itself. Is that clear to all of you, students? I'll see you then tomorrow. Do take care of yourself in the meantime, students. Please revise. And tonight, 10:30, remember, we are doing this revision sessions. So 10:30 tonight, I'll see you for the revision class. Students, Amrita, fine, revision class tonight then. See you then, students. Do take care. Bye-bye. Bhagwati, Vyati.